Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 16th, right at the market's close. Well, the S&P 500 and the Dow posted fresh highs today as investors push the benchmark indexes toward weekly gains on the back of strong economic data, falling Treasury yields, and positive earnings from big U.S. banks. The S&P 500 has hit record highs in 6 of the last 7 sessions. Wow, huh? And the Dow surpassed its peak for the 4th session in 6. And now let's go on to 3 charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR. Of course, this is the ETF that follows our benchmark index, the S&P 500. We watch the S&P 500 because a great portion of the stocks will follow it higher, and they will follow it lower. So this is kind of let's call it a kind of a crystal ball. Certainly all stocks don't follow it, but many do. So it's kind of a crystal ball, and it kind of leads the market around for sure. So today when we look at this chart, we can see that the SPY closed at a new high up here, a new all-time high yet again at $417.26, which is about $41.72 on the S&P 500 itself. Now, we talked about this last week. The red line here is the simple 20-day moving average. The green line is the simple 50-day, and the black line is the simple 200-day. We talked last week about the SPY trading at a 3% premium to its 20-day moving average, a pretty unusual occurrence. Now we're at 3.5% premium or above the 20-day moving average, which is, it's getting stretched. It's beautiful, but it's getting stretched. Now, as you can see, since last October, or November, I should say, the SPY, if we look left over here in the chart, we can see where it made kind of a double bottom here. Then it picked up, moved up above the 50 and the 20-day moving average, and pretty much used the 20-day moving average as a stair step to move up in a really nice, solid, shallow, but that can be a good thing, uptrend. A couple of times it fell down to the 50-day, but bounced back up, fell down to the 50-day again in the 1st of March, rebounded, and then has taken off, bouncing off this 50-day moving average, which happens, bouncing up and off of that and up to our present price again today, all-time closing high at 417.26. We have new price resistance now up here for technical sake at 417. And of course, the 20-day moving average for more support, we should call it potential support, coming in here at $402. We have a trend line coming in here just under that at about 400, short-term trend line. We've got the 50-day moving average coming in at 394. One thing we do need to notice down here, and I believe we did last week, is that the RSI, this line, is now definitely overbought. It's definitely over the 70 line. It's actually at 74 right now. Now you say, who cares, Toni? If we look left on the chart, we can't see it on this chart, but the last time the RSI went above, way above its 70 line, then we had, if you can see this move down right here, then we did have a bit of a sell-off. However, what we have going on here in the next 3 weeks is earnings season, and that always, depending on what the big momentum stocks do, depending on when their earnings come out, how the market evaluates them, that can not matter, because in the next 3 weeks, price is going to get tossed around quite a bit here, assuming we don't have any exogenous shocks from the outside world. So again, 3 more weeks of earnings for the first quarter. Please mind your stops and trade wisely. Again, this market is stretched pretty tightly. Let's go on to our next chart. This is the Invesco QQQ, symbol QQQ. A lot of traders call it the cubes. I tend to call it the Qs, whatever. This is a major index in the market. Top holdings include Apple, Amazon, Alphabet, Facebook, Microsoft, Intel, Netflix, that whole group. And as you know, they can be pretty volatile. Now today at the close, we have yet again a brand new all-time high for the QQQ at $342.01. So the Qs also made a new high today. And of course, we know, as we talked about it a minute ago, the Dow did as well. Now, our last all-time closing high was back here on February 12th, or one that matters with a pivot point here. That was at 336.45. And as we know from there, the Qs fell down. Tech took a hit into February, then bounced up, made a higher low, which is always very important, meaning buyers came in sooner. They didn't let it fall all the way back down to this level down here. And then the Qs rallied, rose up above their 50, of course, above their 20-day to the point to where they are now. It is now at the 342 all-time high. So we look down here at the RSI. It is not over the 70 line, but it is at 70, getting stretched pretty tight again, but it's still at the 70 line. And if we look up here, we see now that we have resistance at 342. We have potential support at 326 at the 20-day, 323 at the 50-day. We've got a trend line right after that. We have another potential support, price support here at 300, and then of course at 296 at the 200-day moving average. So what we have to think about next week, we have to see if the big tech companies announcing earnings can keep the QQQ at this level, because again, NASDAQ and tech stocks will tend to follow it. So can earnings keep the Qs at this level in the coming week? Can they keep it higher? Can they break it to new highs? Or if for whatever reason, is it going to roll over and start down? It will be volatile, big moves, whatever it is. So please mind your stops and trade wisely. Okay, our last chart today is a chart of the daily chart of the iShares U.S. Pharmaceuticals ETF. It has 45 holdings. Top components are Johnson & Johnson, Pfizer, Merck, Catalent, and Bristol Myers. Now, as you can see here, look, just kind of back up here and look at the big picture. Look at these candles kind of individually first and then in a group. And notice that the candles on this chart on the IHE are wide. They're tall. That means that the bulls and bears were duking it out here. The bulls will start it off high in the day. The bears will push it down to a low close, and on and on. Big, wide price swings intraday, kind of certainly disorganized pattern for September, October, November, kind of getting a little better in December, January, a pop-up higher. We had a January high here, relative high of 188. Then the IHE made kind of a double top here, fell down to this low in March at 170. Then notice here, when you were looking here at big moves, kind of crazy moves and volatile, notice how much more orderly the candles have gotten ever since this February, March low here. Notice how much more at 170. Notice how the candles have gotten, at least many of them have gotten more orderly, not as big price swings, not quite as volatile, especially as we get into March, and the pattern becomes much more clear on the screen. So what I'm noting here with the IHE, with the pharmaceuticals, that it is making a triangle here. We can draw the next line down here, and we can also raise it up from here to here, watching the 50-day moving average, which is drawing kind of an overhead trend line for us, or line for us. So we're making this triangle here on the IHE. Want to see how it plays out. Almost everything I looked at today was way overbought, stretched way tight, but pharmaceuticals, if they can stay positive, if it looks like they may have some more room left in them, or I should say, the IHE. So today when I captured this chart, the IHE was trading or closed at $179.05. We have two higher lows here since this March low. I like that. And we have a trend line that comes in here, right? A short trend line at 174. So if in the coming week, the IHE can remain above 173. If it can remain above 173, I am going to add a small position to my trading portfolio with an initial stop at 174. I'm going to keep the stop really tight. You want to lower it, it's up to you. If the IHE moves up here, now look guys, it could move up to the 50-day. It's getting swatted on the head right now by the 50-day. If that knocks it back down, I'm okay with that as long as it stays above 173 to 174. I'm going to put my stop in at 174, so it has to stay above that. Because if it starts down and breaks this triangle, I'm not interested at that moment anymore. So the IHE, if it stays above, it may go like this, that's okay. It may go higher, that's okay. But if it starts lower, again, below 174, 173, I don't want it anymore. So if it can stay up here, and if it rises above 182, if and when it does that, I will add to my position. And of course, by then, my stop is going to be a trailing stop. So you may want to keep an eye on the IHE in the coming week. Before we go on to final thoughts, please know that if you'd like to become a more successful trader, this is a great time to check out my trader training programs, because for a few more days only, we are offering a 20% discount on each and every one of my programs. All you have to do is enter 20 product at checkout, and that information is on this screen right here. So don't worry about it. It's right there if you can't remember that. Enter 20 product. Each and every one of my training programs is on sale just for a few more days. You will enjoy my powerful strategies devoted to swing trading, trend trading, bottom fishing, and more. My programs are easy to understand, and they can help you increase your gains quickly and easily. So to see all of my online training programs, just go to the link on this screen or simply click on the orange button below. Okay, and now on for final thoughts. Our question this week is, before I trade, do I spend the necessary time I need to research and create plans for each trade? Further, do I think about my preparation process as a chance to discover new opportunities? So let me ask you this. Do you prepare for trading by diving into your desk chair just minutes before the market opens, or even after it opens, and then you start glancing through the headlines to see which hot stock you're going to trade today? If so, you may become overly reactive as a trader. Not good. Instead, consider doing your preparation after the market closes the prior day, maybe it's a Sunday even, which allows you to get out of the heat of the moment. That's what takes us down a bad path sometimes. Get out of the heat of the moment and develop a plan to trade stocks based on your indicator setups. This allows you to be in a more proactive mindset, which makes you feel more in control of your trading destiny. Look, guys, self-confidence is directly correlated with the perception of our levels of preparation coming into the trading day. If we know we're not prepared, our minds are going to go, oh gosh, this isn't going to go well. And that leads to our ability to perform successfully or not. Good preparation also influences the skill level that you believe you possess. We all need to find time to prepare for the next trading day, not the current one as much as, but let's get prepared early to build up our feel for the market and our confidence. One of the key components of successful trading is spending enough time to complete the research you need to trade in a calm and confident process, and then plan each trade with a firm entry, exit, and profit target price. We need 3 prices. Where's the best place to enter? Where are you going to get out if it goes against you? And where is your profit target? And you can move your profit target later, but where is it now? So how would you prepare if you thought of your preparation process as a chance to even discover new opportunities that would lead to higher profits? And that happens. So try this preparation out. Sometimes I find stuff I didn't even know was out there. Try this out by taking more time for research and preparation. Try it for the next 5-day trading period. You should see better trading results. Finally, if you'd like to become a more successful trader, check out my trader training programs. And remember, we are offering a 20% discount for all of my online training right now, but this sale ends soon. Please just enter 20 product at checkout, and you'll see those instructions on the screen. To see all of my online training programs, simply go to the link on this screen that you see right here, or click on the orange button below. Couldn't be more simple. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.